बना दे special और fashionable. Fog scent, new fashion wear for men.
Hello and welcome. You're watching Ask PQ on Bloomberg Quint. I'm Navneet Saluja D'Souza. Well, this is the show where we address all your stock queries, so you can write to us on Twitter, Facebook, or call us now on 022-4540-4141. You can also mail us at askbq@bloombergquint.com with all your financial queries, and we'll try and address as many as possible on the show. Just remember to add that AskBQ hashtag. Well, let's get in our two experts of the day then. Amar Singh of Angel Broking and Parthiv Shah of TRACOM Stock Brokers are here to answer all your queries. Good afternoon to both of you, gentlemen. Okay, but before we get to the individual queries, here's a quick look as to what the markets are doing right now. It was a gap up opening that we saw in the morning. The benchmarks are still sustaining those gains. Nifty is trading firmly above the mark of 10,320 right now with gains of nearly 1%. It's Bank Nifty actually which has been underperforming, and reason for the same is the PSU banking lot has once again fallen in today's session. The Nifty PSU bank as we speak is almost at day's low with cuts of 3%. If you look at the losers, the constituents of the Nifty PSU banking index are Andhra Bank, a counter which is also in the futures and options market. That's tumbled nearly 13%. ITBI Bank, which so far was outperforming the other PSU banks, has also come under pressure. ITBI Bank as we speak is down almost 11% in trade, trading around those levels of 63, while the other stocks are Oriental Bank, Union Bank, Bank of India, which have come under pressure. In terms of sectoral indices, which are doing well, clearly some support has come in from the Nifty FMCG as well as the IT lot once again. Remember, Nifty IT on YTD basis is outperforming. That's given you returns of nearly 11 to 12%. Nifty FMCG trading with gains of 1.7%. Quickly, let's just pull up the Nifty gainers as we speak. From the FMCG lot, you've got ITC that's right on top, and the reason for the same is there was no discussion in the GST Council meet on Saturday with regard to cigarette prices. That's the reason why that fillip for ITC. HCL Technologies from the IT pack and Bharti Airtel are your top gainers on Nifty. Talking about the losers from the pharma pack, you've got Aurobindo Pharma, which is right on top with cuts of 2%. State Bank of India is the other one which is trading with cuts of 2% once again, and Coal India and Ambuja Cement are a couple of other losers in trade. Just one stock before we proceed to the viewer queries. Let's just pull up United Spirits. That stock has seen some short covering bounce back. Remember, it's come off 25% from its peak, and the reason why United Spirits is up in today's session is that the ENA taxation, the GST prices were not discussed in the GST Council meet, hence the gain that we are seeing for United Spirits, 31.13 for that counter. Well, that's about the markets, but let's move on and take some viewer queries. Akash Story writes to us on Facebook. He has 250 shares of Aurobindo Pharma, which he bought at a price of 800 rupees. He has a long-term view and he wants to know if he should hold or sell. He's bought at 800. Remember, we highlighted Aurobindo. It's one of the top losers on Nifty today, down 2%. Parthiv, let me come to you first. I think it's trading somewhere 13 to 14 times its FY18 earnings. What do you think he should do? It's come off sharply from his buy price of 800 rupees.
I think the problem with Aurobindo has never been the valuation. Even when it was quoting at 800 levels, it was slightly shade cheaper than many of its peers which are catering to the US and the European markets. But I think unfortunately the sentiment which has been sad, especially on two counts. One is like we know that in US, any company, despite having very strong pipeline of ANDAs, and as and when their pipeline materializes and once they start selling the drugs in the US, the pricing pressure that they are getting and the bargaining power which they used to have is no longer there. That is, I think, keeping the street estimates quite poor. As a result of which, I think even we are seeing that many of these pharma companies, despite the revised earnings which are lower, I think they are reporting numbers which are not at all matching even those lower revised earnings. And in Aurobindo, I think another unfortunate event that took place is the inspection outcome. Though luckily there's nothing of data integrity issues of sorts, but I think definitely any such inspection which has these observations always creates some sort of panic for certain long-term investors who wishes to exit this counter. As a result of it, there's a lot of pressure. So I, at this juncture, feel that Aurobindo might not have much downside. Most of the negative news could be factored in, but I think the upward journey could take longer than one envisages. So I think if one is a patient investor having 2 to 3 years horizon, one can hold on to it. But otherwise, in the pharmaceutical sector, I think we are more comfortable with names like Laurus Lab, Cadila Healthcare, which have their own stories, and I think they definitely, I think in Cadila Healthcare, they don't have any plant-related issues, and I think their product pipeline and the A&D is extremely strong, which gives a lot better visibility in terms of the long-term outlook for their earnings.
Okay, that's the view coming in on Aurobindo Pharma. Parthiv suggests if you're a long-term investor, say if you have a time horizon of 2 to 3 years, you can definitely hold on. But if you want to switch to other pharma counter, you can look at stocks like Cadila or Laurus Labs. Well, our next query is on LIC Housing Finance. Ankit Mishra writes to us on Twitter. He has 10,000 shares of the company at 620, and Ankit has long-term view. He wants to know what should he do. Well, the stock price has definitely come below Ankit's buy price, and he's got a big quantity as well of 10,000 shares. 487 is where LIC Housing Finance is quoting today. Parthiv, I'll come back to you since it's a long-term query. What's the view here?
See, unfortunately, his entry price has been right near the peak levels where all these housing finance companies were at a frenzy, quoting at 4-5 times price to book. And post which we saw a lot of rationalization, especially because the yields have moved up. And many of these NBFCs whose borrowing metrics have gone a little haywire in terms of the cost of borrowing would go up. As a result of it, we have seen a massive correction in not only the NBFCs, but even these HFC companies. So I think even LIC Housing Finance has corrected. No doubt, I think we find this company a good company to hold on to. His buy price is extremely high vis-a-vis the current market price. So rather, I would suggest that at current levels, it won't be a bad idea to cost average and bring down your cost, because no doubt this is a quality franchisee with the LIC brand equity. I think their borrowing cost will be sustained. And I think they are in a growth trajectory in terms of the affordable housing theme, and the housing finance company as a company, they have maintained their balance sheet extremely well. The stress asset is quite low, so that always is a big help. So I think if one has a 2 to 3 year horizon and one can cost average out here, I think within next 2 to 3 years you would be having a profitable exit. So I think it's a good company, so one can hold on.
Okay, so one can look to hold on to LIC Housing is the advice coming in. I'm going to take Ankit Shastri's query. He's written to us on Facebook. He's bought CESC at a price of 1,030 and he's got 3 to 6 month time horizon. He's asking should he hold or add more at lower levels, since CESC has slipped below Ankit's buy price of 1,030. Amar, I'll come to you. What's the advice here? If somebody is bought around 1,030, should they add more at these levels or exit?
I would suggest is that he can hold on to his position, because CESC, yes, on the medium-term charts, it has been witnessing selling pressure, and also the trend, I would say, remains remains on a negative note. But the long-term trend remains positive for CESC, and also the short-term trend, it is showing signs of bottom formation. So it has got crucial support somewhere in the region of 930, 940. But on the upside, again, it has got very strong resistance somewhere in the region of 1,000 to 1,020. But the downside seems to be limited. So if he wishes to hold, he can hold with the stop loss below 930. And once the stock consistently starts trading above 1,020.25, then he can expect an upward move towards 1,050.60. But the stock overall, looking at the long term as well as the medium term structure, it seems that the stock is going to be range bound between 930 on the downside and 1,030 to 1,050 on the upside.
Okay, that's the view on CESC. The counter is trading almost at day's low. 970 is the level. Well, we're getting a lot of your live queries on Facebook and Twitter. Let's just go across to them. Saurabh Joshi writes on Twitter, he bought 419 shares of Avanti Feeds at 2,589. Saurabh has a 1-year view. He wants to know what should he do. Remember, Avanti Feeds, Waterbase, as well as Apex Frozen Food, all these three counters have been seeing some bit of selling pressure, as there was news that US Department of Commerce has suggested to hike anti-dumping duty on Indian shrimp for almost 0.8 to 2.3%. Let me come to you, Parthiv, on this. All of these stocks have seen a huge correction, but specifically for Avanti Feeds, what would you advise?
Yeah, I think this is the best name in the sector, and I think yes, there's slight concern regarding the duties that have been imposed by the US government. But I think if you see historically, I think such duties have been there, and I think still I think the market for in terms of these shrimp players, I think is extremely lucrative in US. So even at the cost of certain price reduction, I think they still make reasonably good margins out there. So I think I'm sure that with these hikes, I think the market's not going to shut for them. And I think these players will continue to do a lot of business out there. And I think Avanti Feeds is also into the feeds business, which is, I think, extremely good in terms of the performance. If you go to see, I think their return on capital employed is one of the highest in the industry. Their cash flow generation is extremely strong, and they're continuously expanding their capacity. So we're envisaging that expanded capacity would come and play in terms of higher earnings growth over the next 2 to 3 years. So luckily the stock has come up. So I would suggest one can hold on to this theme at least for the next 2 years, and we're quite confident that he'll get an exit price which is higher than his purchase price.
Well, the managements of all of these companies have highlighted that the impact may not be too much, and they will be able to absorb if there is any sort of duty hike with regard to shrimp exports. But the stocks definitely are under pressure. Ankit Shastri on Facebook says he spot shares of Piramal Enterprises at 2600 with a long-term view. He wants to know what to do. Well, this is the counter. In the last 6 to 7 trading sessions, it's fallen from those levels of 2700. Just in the last 3 sessions, a bit of recovery has been definitely seen for Piramal Enterprises. Last 7 days, but it's down nearly 7.5%. Amar, if I could come to you on the charts, if somebody is bought around the levels of 2600, what would you advise them to do?
See, overall, looking at the charts, clearly the medium-term as well as the short-term trend for Piramal Enterprises remains down. But the long-term trend, however, remains positive. That's the reason we've seen a pullback from the lows of 2270 or so. But it is likely to trade now range-bound. It's not going to be easy for the stock to breach the 2470 on the upside. So what ideally the buyer can do is he can hold a stop below the recent low of 2230. Below that, he can hold on to his position. And if the stock doesn't consistently sustain above 2470, 2480, then I think he should exit that stock, because the stock is unlikely to trade above 2600 in the short term. It could be again holding for a very long-term perspective. But I would suggest is that 2470, 2480, he should definitely watch on the upside, because that's going to be a very strong resistance zone for the stock. Whereas he can have a stop below 2230 in the short term.
Parthiv, very quickly, Piramal Enterprises long-term view, would you suggest holding on at 2600 levels if somebody is bought?
Yes, absolutely. I think we are extremely bullish on this counter for the long-term view. The value that Mr. Ajay Piramal has created for the shareholders is amazing. They recently raised 7,000 crores, which they can lever it to almost 3 times and kind of use that money in the financial services space and grow the advances book by almost 25 to 30,000 crore. And I think we've seen that their lending practices is one of the best in the industry. They earn extremely good high ROEs, which is upwards of 26%. And the asset quality has also been extremely good even in stressful times. So that gives us a conviction that, this company can deliver very good returns for the shareholders. And even in terms of the other businesses, which is the pharmaceuticals and the IMS business, I think over there also they're growing extremely well. So in future, we are envisaging that there could be a demerger play in this as well, which can unlock a lot of shareholder value. So yes, I think someone having 3, 5, 10-year view, this is the stock to hang on, will definitely create a lot of value even from it.
Okay, that's the fundamental view coming in on Piramal Enterprises. If you have a view of 3 to 5 years, you can definitely look to hold on, is the advice coming from Parthiv. Our next query is from YouTube, and Rahul Nayak has written to us. He wants to invest in SBI Life with a long-term view. Parthiv, I'll come back to you. A fresh investment into SBI Life, would you suggest that, or is there a better insurance player in the market?
See, I like this sector, no two ways about it. if one pick I have to give, that would be HDFC Life. No doubt HDFC Life from on the face of it, especially after the run-up post the listing, the valuations are even more expensive than SBI Life or for that matter ICICI Prudential Life. But I think they deserve those high valuations because of the fantastic return ratios, because of the HDFC brand, because of the value that this group has created for its shareholders in the past, and all the best corporate governance best practices plus the bank channel that they share. And again, I think in terms of the futuristic growth, this is one company which is targeting the protection market, and the protection market has been scaling up quite well for them. There's a long way to go in India also for that market to grow. So definitely HDFC Life would be the most preferred pick in the life insurance space.
Okay, HDFC Life is better preferred according to Parthiv. Let's take some more queries. And on Twitter, Rahul Chanduka writes to us. He wants to invest in Crompton Greaves as well as Thomas Cook. And he's asking, are the valuations fine of these companies around the current levels if he should enter in both these companies? Parthiv, I'll come back to you. The valuations of Crompton Greaves and Thomas Cook, according to you, at these levels, how do you view them? And would you advise somebody to take fresh positions into this?
Firstly, if I have to talk about Crompton Greaves, I think I would be far more comfortable parking my money in V-Guard Industries. I think one, in terms of the management quality, they've created a lot of value, extremely smart management in terms of the diversification strategy, and they were predominantly in the south, and now they're slowly gradually expanding in the east and the northern part of the country. And I think they have very good marketing strategy, and their margins that they earn is extremely good. They have come across all the post-GST hurdles that they had in the past few quarters, and I feel that this is far more better in terms of valuations than Crompton Greaves. So I think as compared to Crompton Greaves, I prefer V-Guard. Talking about Thomas Cook, unfortunately, I think this has been a stock where despite having marquee names like Prem Vatsa, who's owning this company via Fairfax Holdings, I think the stock has really gone nowhere. Rather, the subsidiaries of this company, names like Quest Corp, they have done extremely well for the shareholders. But Thomas Cook has gone nowhere, and now the management is probably talking about a value unlocking exercise, kind of a demerger sorts, wherein all their subsidiaries that they own, I think they're talking about giving shares of those companies to the shareholders of Thomas Cook. So that might be probably of some help, but I think it's a company only for very patient investors. We believe that with the unlocking of the valuations, I think there could be some value unlocked for the shareholders. And if one has 2 to 3 years, I think it's a company to hold, and definitely they can unlock some value out of it.
Okay, that's the view coming in on Thomas Cook as well as Crompton Greaves. Let's take our next query. This one comes from Gaurav Kolwa. He wants to invest in Tata Motors with a short-term view, and he's seeking advice for the same. Remember, Tata Motors on YTD basis has not done too well. The counter is actually down 20%. Amar, if I could come to you on the charts at these levels of 344, 345, would you recommend somebody taking a short-term trade?
Overall, looking at the Tata Motors from a short-term, long-term as well as a medium-term trend, they continue to remain down. But what we are witnessing is that it has been beaten down sharply from almost 450, 460 levels to trade around 345 currently. And looking at key support levels, it has got key support somewhere in the region of 315, 320. So ideally, the stock could trade even lower. So that could be a good level to buy if he wishes to buy. And what needs to be looked at is that since it has been trading in oversold conditions across all different time frames, so the downside seems to be limited. So I would suggest is that any pullback towards 330, 325, 30, that can be a buying opportunity with a stop loss below 315 and a target in the region of 370 to 375 on the upside.
Okay, Tata Motors in the last 1 year is down almost 26%. Some bit of strength, however, seen in today's trade where the counter is trading with gains of 1%. Our next query comes on PTC India Financial, where Sanjeev Khajuria on Facebook says he's bought 1,000 shares at 33. He wants to know if he can hold on or not, considering the stock's actually fallen almost 7 to 8 rupees from his buy price. Amar, I'll come back to you on the charts. PTC India Financial, what would you advise?
Actually, I don't track this particular counter, so I'll not be able to comment on this.
No problem. I'll just take a fundamental view then. Parthiv, PTC India Financial, if you track, what's the advice?
frankly, Dominic, never been a big fan of PSU NBFC company, especially that too lending only to one vertical, which is the power sector. And we've seen, I think, that these companies initially don't tend to show up any sort of NPAs on their books, but all of a sudden there are surprising quarters where the NPAs tend to spike up, and that is where a lot of value destruction takes place. So I think in the NBFC market, I think there are a lot of companies which are far better well run. Name like LIC Finance Holding, which recently raised a substantial amount of capital, and we know that this is a company which is working on delivering higher ROEs. Plus, they're working on the better metrics in terms of cost to income ratio. The stock has corrected from its peak levels of 210, 220 to a comfortable level of around 155, 160. So this is where we are suggesting that one can definitely park money, and I would any day prefer such names which can really compound wealth over the next 3-5 years vis-a-vis a PTC Financial Corporation.
Okay, so L&T Finance Holding can be a better bet compared to PTC India Financial. Let's take some more live queries that we are getting. Ravi Kumar writes to us on Facebook, bought 300 shares of Siddhartha Energy at 528. He's got short-term view and he wants to know what to do. 528 is the buy price and currently the stock's trading around the level of 412. Though in the last 1 year, we've seen good returns from Siddhartha Energy. It's just off late in the last 2 to 3 months that the correction has come by, with the markets also falling. Amar, I'll come to you since it is a short-term query. What would you advise if somebody's purchased at higher levels? Can they hold on?
Yeah, overall, looking at this particular counter, the long-term trend for this stock remains definitely very positive. But what we are witnessing is that the short-term trend, the stock has corrected from almost 600 levels to currently around 410, 412 levels. So, and also the stock is in extremely oversold condition. So there is the possibility of a pullback. So he should definitely hold his position with a stop loss below 370, and the level that he needs to watch out on the upside is around 480 to 500, because that's going to be the first level of resistance. He somewhere bought around I think 600 odd or so levels. So the level that he needs to watch out is 480 to 500. But the stock seems to be limited on the downside, so he can definitely hold on to his position.
Parthiv, I'd like to come to you as well on Siddhartha Energy. Since you track this space pretty closely, what would your advice be?
Yeah, I think all these secondary semi plays in the steel sector, I think they have corrected from their peak levels, because if you look into the prices of pellets, sponge iron, and even wire rods, I think they have corrected from their peak. But Siddhartha Energy, I think one slight concern that the market participants have is all the capital allocation that they've done in the hydropower sector, because some of the projects are stuck there. So I think that's the key reason why the stock is not getting re-rated further from its peak valuations. But in this space, I think we're extremely comfortable. I think talking about stock like Godavari Power Ispat, which we had recommended in the past on your channel at levels of around 220 to 30, has done extremely well. Again, this is a stock which went to peak levels of 600 and has corrected a lot. So here, I think we are very comfortable. We are excited about this Q4 numbers, which should be extremely good. And this is a company which is talking about continuous debt reduction, which bodes well in terms of the market sentiment. And because of the fully backward and forward integration that they have, I think they will have a lot more resilience in terms of the prices and the EBITDA by ton that they own. So I think I would prefer Godavari Power Ispat over Siddhartha Energy.
Well, Godavari Power's quarterly numbers also in the month of December were pretty buoyant. But let's move on and take our next query. On Facebook, Harsha Vardhan writes to us. He wants to invest in Mahanagar Gas and he has 3-year view. He's asking what sort of returns can he expect if he puts his money here. Parthiv, I'll come back to you. Mahanagar Gas, if you track, would you advise somebody to invest with the next 3-year view?
Yes, we are extremely bullish on NGL, and the reason why we are bullish is not only because the existing business model is very good and they can really up the utilization levels there in their existing geographies, but I think the government is also quite upbeat in terms of allowing all these players to bid for newer geographies. And we know that NGL has a rock solid balance sheet, it generates free cash flow, and all the new capex that it has done, especially in the Raigad place, they have done it through the internal accruals, and post which there won't be any debt in the company, still will be cash rich. So I think it's a fantastic business model where once they have their assets laid out, I think they earn fantastic free cash flows. So it's a good company with very good dividend payout history as well. So NGL is a company that, I will be very bullish on for the next 3 years.
Okay, so bullish on MGL, which means that one can look to buy at these levels. In the last 6 months, however, Mahanagar Gas is down almost 14%. Let's just take one more query for the day. On YouTube, Rohit writes to us, he wants a short-term view on Rossll India. I guess it's written Rossll India, pardon for that. It's a tea maker, I think they export tea. Let me just get a view from Amar going, since it is a short-term view. At current levels, Amar 97, 98, if somebody's already bought, because Rohit's not mentioned if he's already taken a position, what would you advise them to do?
I would say technically looking at the long-term charts as well as the medium-term charts, this stock is not going anywhere. So clearly reflecting that it's going to trade in a range. On the downside, he can, if he has a position, then he should ideally have a stop loss below 86. That was the low on 5th of February. So below that, he can hold on to his position, because till the stock doesn't consistently trade above the 110, 115 mark on the upside, the stock is going to be trading in a very narrow range between, I would say, 85 on the downside and 115 on the upside.
Okay, that's the view coming in on Rossll India. Last 6 months, it's down almost 12 to 13%, trading around those levels of 97 or 98. But on that note, I'd like to thank both our guests. Thank you very much, Parthiv and Amar, for helping our viewers with their queries today. Well, that's all that we have in this edition of Ask BQ. But remember, we're just a tweet, post or a call away. So keep your queries coming, and we promise to address all of them through our shows. You can also log on to bloombergquint.com, search for hashtag AskBQ and get answers to all the queries that were discussed on the show today. Well, Power Lunch is up next, so keep watching Bloomberg Quint.